That's right. That was, well, maybe not the biggest news yesterday because we had the NLC protest and the cost of living crisis also, but that was a very big news yesterday. And of course, the impact will start from today because it came in late yesterday. So we have to discuss this with us, Dr. Muda Yusuf. He is the Chief Executive Officer of Center for Promotion of Private Enterprises. He walks into the studio now to share his thoughts already. We saw your statement yesterday. Yeah. I know you've always been against, good morning, Dr. Yusuf.
Hey, good morning.
So I know you've always been against the CRR, and now we're having it at 45%. So in simple terms, what it means is any deposit from individuals, the bank is only allowed to send out or to give us loan 55% of that deposit. So that is another way the central bank is trying to squeeze money from circulation and perhaps mop up inflation. But you are never a fan of this.
No, you see, particularly those in the real sector, because we are concerned at this stage first about investment, we are concerned about production. Now, those in that space, they're already squeezed. Because even at 32.5% CRR, it was one of the highest you can find anywhere in the world. And that has implications for what you call financial intermediation. Because the whole essence of banking in an economy, primarily and fundamentally, is financial intermediation. And what that means is that the banks have to mobilize resources from the surplus end of the economy to the deficit end of the economy. So if you have a situation where you have not even moved it up to 45%, so that means for every 100 million naira deposit, 45 million will be taken out. On top of that, you have a liquidity ratio of 30%. So 30% of what is left has to be kept in liquid assets. So what is left for lending?
But I mean,
where is the relationship between the banks and the economy?
No, but doesn't it reflect the state that we are in at this time? Seems we are in a desperate state where headline inflation is almost 30%.
You know, even you have said it several times. The key drivers of inflation are not necessarily the credit, because this is going to affect the capacity to lend. This is not a credit-driven economy. The ones that will be affected the most are the few operators in the economy who have exposure, credit exposure to the banks. And you know what the banks are? Once there is this movement, I'm telling you, by this morning, many of those who borrowed money from the banks are already receiving notices of upward review. And the challenge with credit is that you're already locked in. You have taken the money, you have invested it, you have bought machinery, you cannot exit easily. So this is why I'm worried about the implication for the cost of credit, about the implication for financial intermediation. Because if we are talking of growth, we are talking of job creation, it's about the capacity to be able to access funds. And from what we have seen, over time, this hike in interest rate has not actually impacted inflation significantly, and the CBN governor also.
Yeah, but he did say that it's because it was not backed up, by maybe collaboration from the fiscal side, which has promised to handle. And I guess that's why he's also looking at, apart from talking to the coordinating minister of the economy, also dealing with the FX issue, hoping that putting all of that together will make an impact. Because I remember, during the former governor, it was a challenge for him, so much so that one of the MPC had to come to start reeling out maybe where we would have been, but for the hikes. Because there were questions as to, perhaps this is not the major driver of inflation in Nigeria, and so it cannot be the one to give the answer to reducing inflation in the country.
That is the point. Because the way the hike has come across now, particularly the magnitude, this is huge. This is the biggest, perhaps, in the history of MPC. You move CRR from 35 to 45, MPR from 22 point...
but Dr. Yusuf, don't forget that we have missed some meetings. So maybe we would have still been here at this time if we had meetings from July last year.
No, the important thing is that monetary policy instruments alone cannot deal with this problem. And to the extent that this is going to create a major squeeze, both within the banking system in terms of the financial intermediation role, and from the perspective of the investors in the economy, who also need funds to be able to create jobs and all of that. To that extent, I had expected that these things should have been gradual, irrespective of the fact that we have omitted some MPC meetings. And we focus a lot more on the biggest drivers of inflation. We are talking about FX. FX issue is not so much of this credit issue. It's more of a major issue, fundamental issue with supply. Of course, the CBN has been taking steps to deal with issue of supply. The fiscal authorities have been taking steps to mobilize more foreign exchange. That is fine. And hopefully those reforms will yield some results. But to put all the pressure on those who have borrowed money from the banking system, I think it's likely to be counterproductive. That is the concern that I have.
So what do you see, how do you see this playing out now? Like you've noted, a lot of these people who are going to be immediately affected are those who have already taken facilities from the banks. How do you see it playing out now in the real sector?
No, it's going to affect them adversely, because we are talking about businesses who are already grappling with FX problem. They are still struggling with that. They are grappling with all these custom duty exchange rates, which the CBN has not really done something concrete about. We have been advocating that that exchange rate should be fixed as maybe 1,000 naira. I think that will bring some relief. They are grappling with the issue of cost of diesel. Diesel is now 1,003, 1,004. You know the implication of that. Then you have a populace that is also grappling with purchasing power. So this is a big issue. I admit that policy sometimes there has to be trade-offs. You know, in an attempt to solve one problem, you create another problem. But we have to look at these trade-offs properly so that the net effect on the overall economy will not be too profound. Because quite frankly, the magnitude of this jump is too much for me. Yeah.
Then let's talk about the FX part too. Yes. The CBN governor was very emphatic about regulation and the new rules. And we did also see a statement yesterday that they will be resume selling dollars to, or FX to, the BDCs. And some people said, isn't that one of the weaknesses of the former administration?
No, you see, the BDCs also have a role to play in the chain. Because when you talk about retail forex transactions, it should not be something that the banks should be dealing with. You need 500, you need 200, you need 1,000, 2,000. Why must you be going to the banks for that? You know? So the BDCs are supposed to be attending to the retail end of the market, just as you have in the banks. You have the first-tier banks, you have those in the middle, you have the microfinance banks. The same thing should happen in this space. And because they relate, you know, to the retail end, to the informal economy, they have a role to play. But the way we now channel the funds and the kind of margin, because I'm seeing a margin of whether 1% or something,
yes,
about what they are giving. I don't know how they want to monitor that. That to be a tall order. So we may have to re-examine that. But I know that they have a role to play, either through this kind of channeling of some funds or giving them some other windows for them to be able to also get funds directly, which they can also make available at the retail end of the economy. We have so many small businesses. We have a very big informal economy, you know, and they have easier access to the BDCs because the volume of documentation, those things are much less. So the velocity of transactions is much faster with them. They respond very fast. They don't waste your time. So they also have their own value. But we need to have a framework that will also prevent abuse.
Exactly. I guess that's where the governor says regulation is going to be, they're going to be very strict about regulating.
They have to be very strict, and we need to also watch out for illicit funds. I think he also referred to that. Because there are a lot of funds in the system that are also chasing these effects. Funds that were not products of any genuine economic activities. So this is also creating distortions, and these are variables that we need to capture in the policy process.
So Dr. Yusuf, now, we're meeting again in about a month.
Yeah.
What do you see between now and then? I guess that will also determine the decision that we will have then.
Well, of course, the CBN will have to monitor the trend the impact on inflation, the impact on FX, and what the fiscal authorities are also able to bring to the table. So, I mean, the totality of that will determine what the next step is. But certainly, not to go and put additional pressure again.
So you think
on investors.
Perhaps by March, either there'll be a hold or a cut?
Yes, something like that. No, at best maybe a hold.
At best a hold.
Yes, a hold, yes.
All right, Dr. Yusuf, thank you so much
for
your time this morning.
Thank you.
All right.